What's up, guys? Brad here. So today I want to talk about Mohnish Pabrai and GrafTech. Now, we all found out in Q1, Mohnish Pabrai sold off his entire position in GrafTech. So today I want to talk a little bit about why I think Mohnish Pabrai did that. I own a stake in GrafTech, and I'm also going to share, did I sell, or what am I doing with my GrafTech position? So the high-level thesis that Mohnish Pabrai had with GrafTech was GrafTech essentially had $600 million per year coming in free cash flow from these 3 to 5 year contracts selling graphite electrodes. Now, when you have $600 million coming in each year in contracts that are, kind of longer term, 3 to 5 years. If all you have is that, and you collect that for 5 years, the market cap at the time was $3 billion. So if you have free cash flow coming in with fixed contracts, after 5 years, you break even on your investment. Now, everything on the upside, everything extra is pure profit, all right? And, Mohnish really likes to make these kind of bets where you get your money back in a few short years, and then, everything else is gravy. So, that's really what Pabrai was betting on here. He saw very limited downside and a lot of potential upside. Now, the only chink in this plan was the possibility that these companies that were in contract to buy these graphite electrodes would not honor the contracts, okay? That they would be facing potential bankruptcy and not have to honor these contracts. Well, guess what? We're in May 2020 now, and there are a lot of companies that are facing potential bankruptcy. So we're starting to see signs that a lot of these long-term contracts that GrafTech had may not be honored. Now, the earnings per share in Q1 of 2019 was 68 cents. Q1 2020, it dropped down to 45 cents. Okay? And if you think about it, shelter in place from our current situation, at least in California, in the Bay Area where I am, started on March 17th. Okay? So if we're looking at Q1 data, that's down 34% for GrafTech. And only like the last 2 weeks of that were people really keenly aware of what the situation was, what this thing that's starting to affect the economy. There's a lot of uncertainty about what we're going to see in Q2 numbers for GrafTech. So, and then you look at the long-term debt that GrafTech has. It's 1.8 billion, okay? So, when you're counting on 600 million coming in every year, 1.8 billion doesn't seem like that. It doesn't seem, too crazy. But now, in this environment of uncertainty, where earnings, could really plummet to half or even less than that, now you look at a debt figure like 1.8 billion, and it starts to get a little bit scary, okay? Especially when you've got to generate a couple $100 million just to satisfy those debt payments each year, all right? So this uncertainty around these 3 to 5 year contracts that were supposed to be, locked in revenue, that I think, that's what Pabrai was seeing, and that's why he got out. The risk-reward ratio that he originally saw in this company back in 2019 when he bought in the risk-reward ratio has changed, okay? There's more risk because of the uncertainty about whether these contracts are going to be upheld for the customers of GrafTech. So, I think that's why he bolted. I don't think it was necessarily that he was finding better deals in India, like I had presumed might be the case a couple videos ago. Because I also heard from some of my viewers that he didn't increase his stakes in his Indian positions in Q1. So, my sense here is just that he no longer likes the prospects of GrafTech based on the current market conditions. I even have to imagine that he probably sold at a decent loss, maybe like a 1/3 loss or something like that. He was buying in around $12 a share. I'm guessing he probably got out around $7 or $8 a share. So, it's a tough one for Mohnish. He's going to have to, make it back somewhere else. But, I haven't quite sold out of my position yet. GrafTech was up 11 or 12% today. I'm not really sure why that's the case, but I think part of it is the price to earnings ratio on GrafTech is 2.5. Okay, so even if you're looking at earnings that are quite a bit compromised, when you've got a price to earnings ratio of 2.5, there is some downside protection there, and I'm sure that's piquing the interest of some investors. But still, there's this huge cloud of uncertainty over future earnings, which, that was the big draw for Mohnish, that there wasn't so much uncertainty with these fixed contracts. So we're just gonna have to wait and see how those contracts play out over the next couple quarters. I think it's going to be a very telling couple quarters for GrafTech to, gauge how solid of an investment it's going to be moving forward. I haven't decided yet if I'm going to sell out or not before we see the next quarter's results. It really depends if I'm finding compelling investment opportunities in other companies, which I'm not finding a lot now, because as everyone has seen, the market doesn't really seem to be fearful at this point. Obviously, it dropped a lot in March, but then it bounced back, and I'm just not finding a lot of opportunities, a lot of bargains in stocks right now. So I'll probably sit tight and wait for a little bit more to play out with GrafTech before I consider getting out of that position. One lesson I really did learn, Pabrai talks about only having a 10% stake in each of his investments. No more than 10% of his portfolio is in any one investment when he buys in. And, I put significantly more than that. Of course, it's in my son's kind of retirement account. He's only 1.5 years old, so I have a long runway there. But I probably put more into GrafTech than I should. So that's the lesson for me, is to, probably scale back how much, at least I initially put into an investment before I really understand the business, which you really only understand a business after you've invested in it. So that's a good lesson. That's a good lesson for me to take away from this GrafTech situation. And of course, also to really pay attention to debt, especially when markets are frothy and there's the heightened potential of a decline. Because when you have a lot of debt in a decline, that's when it really starts to hurt. All right, guys. that's all I've got for GrafTech. Let me know what you're seeing in GrafTech, and if you're selling or if you're even buying more, with the price to earnings ratio at 2.5. Some of you may be buying. So that's all I got. Smash that thumbs up if you like videos like this on particular companies, particularly on companies that Pabrai is buying or selling. And I'll see you guys in the next video. Take care.